Yeah, happy Thursday, everybody. Happy Thursday, and welcome to the Dollar Hour. I am Deonte Burden, aka Mr. Short Dollar himself. We got an awesome show planned for you guys tonight because it's dealing with a subject matter that I know everybody has to deal with, and that's insurance. So we're doing a Insurance 101, your complete guide to understand insurance. Because I know a lot of times people use certain terms like claims, policy, insurance, policy holder, things like that. But I want to go through everything, break it down, give you the terms, explain it to you in layman's terms. And if you guys have any questions about it, feel free to call in. I can explain it to you. Most of you guys know I'm an accountant by profession, but in being an accountant over 25 years, 15 of those years, I cut my teeth in what's called insurance accounting. It was a little different from regular, general accounting. Insurance accounting, if you just think about it, insurance deal on what we call policy years, not calendar years. I'm not going to go into all how complex that is, but it's a different way of accounting. So I'm a little versed with the insurance industry because, like I said, I spent that time working for somewhat of an actual insurance company for 15 years in insurance accounting. So I have a lot of experience with insurance. So, I did want to just have this segment tonight because, again, there are a lot of people with a lot of questions about insurance, exactly what it is, how it's done, how prices come up, why things go up, why things go down. So again, tonight's show we're talking about Insurance 101, your complete guide to understand insurance. Before we get started, again, I am Deonte Burden, aka Mr. Short Dollar himself. This is the Dollar Hour. I want to say what's up. First, say what's up to my awesome producer, DJ Lamb.
What's going on, brother? It's Thursday.
Man, what's happening
Best
with
day
you?
of the week. You brought the rain with you, I see.
Hey, man.
It was 99 degrees before you came through here. Then the rain came through with the thunder and the light.
Hey, my bad.
But other than that, it's just a good day. How was your weekend?
Weekend was cool, man. Weekend was cool. Big shout out to my son, Chris Burden. Yesterday was his birthday. He turned 18 yesterday.
18. Can't tell him that, man. Oh, list of the man.
Yeah. So, it was cool. We did a little. We were supposed to went out yesterday for his birthday. He wasn't feeling the best, so we did a couple cupcakes and stuff like that. And shout out my ex-wife, let me come over there and sing happy birthday and stuff. She could have kept me. Let me stop my shit.
Right. Cynthia McCray said hello from St. Louis.
Hey, what's going on, Ms. McCray? How you doing?
She said medical insurance is what she's dealing with.
Awesome. Okay. Well, listen, man, I think we have a great show. We started going through everything and stuff because I'm super excited about talking about the subject because I know a lot of people think they know, but they don't know until you have a situation come up, i.e. prices go up, i.e. get dropped from certain covers and stuff like that. You really don't understand the different parts or different branches of insurance, okay? I also want to say what's up to my other producer, Slick 316. What's up, Reek? What's going on? Right now we're streaming live on Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter. Again, Instagram, Facebook, YouTube, LinkedIn, TikTok, and Twitter. I might have said it 2 or 3 times. The call-in number is 678-740-9894. Feel free to call in if you got any questions about insurance or you want to add anything to the conversation. Again, the call-in number is 678-740-9894. We're talking about Insurance 101, your complete guide to understanding insurance. Right with you before I get running my mouth, with all those platforms we're streaming on, the main platform is the Mr. Short Dollar YouTube channel. So whatever platform you're looking at, be it Instagram, Facebook, TikTok, whatever, go to Mr. Short Dollar on YouTube, subscribe to the channel. That way, if you have to leave in the middle of the actual feed or anything like that, you can come back to the YouTube channel and check out the video in its whole entirety. Also, we got over 700 videos on the YouTube channel for you guys to take advantage of with all the great information. With that said, we also released the remember a couple weeks ago, July 2023 grants. We did the grants for best grants for veterans. We did over 14 different grants and resources for any veterans want to get in business. Also, yesterday released 2023 best grants for women in business, small business grants for women. There's 10 different grant opportunities. So a lot of great information on Mr. Short Dollar.
Yeah, just gotta go get it.
Hey, just gotta go get it.
You be on YouTube anyway.
Hey, before I post the link, go check out the video.
Right.
What they ask me, damn, I tell you.
Oh, gotta call.
Thanks for calling the Dollar Hour. Who am I speaking with?
I just wanted to make a quick question or say a quick question. Is it possible for someone to be overinsured?
Well, okay, good question. The question is it possible for anybody to be overinsured? The question is
Thank you.
no, that's fine. You quite welcome. Are you gonna stay on the line? Because I got to ask proper question, right?
Okay.
Okay, the reason why I asked that when you want to be being overinsured, number one looks at the question you got to ask yourself, what are your insurance? And what I say, when we look at insurance, insurance is pretty much used to replace items, right? So if something get damaged, something get broke, we want to restore it back to a normal whole self, right? So when you say, are you overinsured? The whole point of being overinsured, if you just say, listen, at the end of the day, you're only going to be getting X amount of dollars from a certain thing. So say there are certain, let's take health insurance. Health insurance, you can have health insurance for two different entities, maybe your job, maybe a spouse job. The health insurance is only going to cover so much. They're going to have a ceiling, depending on one insurer. They're not going to come with one and then another one comes back and paying. Typically, the person that's the one whose birthday comes first, that's who the insurance will go up over. If you say to yourself that, listen, I want to cover a certain item, i.e., a house, i.e., a car, whatever, the insurance companies are only going to pay so much. And if they see more than one policy, because they share databases on a universal scale, certain things are only going to get covered so much. So you can't have multiple policies on a property, multiple policies on a car. So when you say overinsured, it really depends on what you're trying to do. Now you got multiple life insurances that can cover certain things because theoretically we had videos before where we talk about life insurance to replace you. So if you got a separate policy outside of your job, just say for 100,000, then your job you got another 100,000, that's $200,000. It really depends on what you're trying to do. If you're trying to replace your income, cover certain bills in the event of the demise or something like that, that's fine. But it's just a question depending on what are you trying to do. Is it possible to make sure if any kind of loss is incurred that it can cover that loss, and also that the amount of money that you're paying in the insurance premium? Because there are times you can be paying a certain amount of money in premiums, and it wouldn't make sense in the grand scheme of things, i.e., gap insurance. Like you might have gap insurance. A lot of times people get gap insurance, and let me know if I'm going too fast or I lose you, please, 'cause I know how I get. If you have a situation like a gap insurance
Thank
when you
you.
buy a car, sometimes they'll include it with a car purchase. I always tell people don't get gap insurance when you buy your car, get it separate with your insurance company because gap insurance is the difference between the loan amount and the value of the car. And we know as the longer we make notes on the car, the loan balance is decreasing along with the value of the vehicle. So at some point, you still want to be paying gap insurance covering the difference that may have been when you bought the car 3,000, but now you're in year three, the loan balance and the actual value of the car are the same, but you're still paying a note with that stuff included. So those kind of things does even be beneficial because you can get gap insurance on your car by itself outside the loan, and in year three you just drop it because it makes no difference because there's no gap. So those are kind of instances where it may be overinsured because you want to be able to recoup the difference. So those are kind of things, but it's a case by case basis with doing it. I don't think I would advise people to do is just sit down, do the numbers, talk to somebody that's credible. They can give you advice. Don't talk to your friends that's gonna get their opinion that doesn't really know. But get some credible advice and try to map things out and make sure the math makes sense. Did I answer your question?
It does, and I was referencing life insurance, and you answered that when you mentioned the premium. Thank
Okay.
you.
You're quite welcome. I appreciate you calling in. That was fast. That was fast. That's a good question when you ask about being overinsured with certain things and stuff like that. And I'm going to share even some things even with me uh, with insurance. Again, we're talking about insurance 101, your complete guide to understanding insurance. And I get a quick story with that said with myself. When I was younger, I'm gonna say when I was 25, I uh, I had $500,000 in life insurance.
Mhm.
Just thinking about that because I had two kids. I think two kids, maybe one away, but I was a young father, and I carried that much life insurance because in the event something happened to me, house note, kids tuition, things like that to be covered.
Take care of.
Exactly. So it was 20-year term policy. 20-year term. We're gonna go over those parts of it. But the terms just mean the actual periods, how many years it was. So 20 years expired. So fast forward to 45,
Uh-huh.
when that policy expired, I reduced it to $100,000 policy.
Okay.
Because I only had one kid.
Uh-huh.
I'm looking. He got three grown brothers.
Right.
my lifestyle had changed. I got a little bit more change in my purse and things like that, so it didn't need it. Assets were I didn't have to do that. So again, if something happened to me, hey, y'all can sell this and do that and all that kind of stuff. You're probably in a better spot than that $500,000 policy.
Okay.
That was my thought process with it. You know, I don't need to be putting all that kind of money out because the older we get, the more expensive we're going to get.
Right.
And I'm just like, look, I know y'all can do that, but just bury me. Y'all some little funky damn flyers. You know? So my thing of it is just like, look, I done gave you way more of information in between your ears, so we don't have to really go through that as much. So that was just my thought process. So we started looking at that was an honest assessment that I did with myself in regards to just having, life insurance. And a lot of times people don't think about it, but we always talk about that. And check out, if you guys get a chance, how much life insurance should you be covering? I did that video about a couple of years ago. But we theoretically remember life insurance is to replace you as a person.
Okay.
It's to bury you, but also replace you because
you and your income.
You and your income and your income, future earnings, and cover out certain debts. Because like I said, I wanted to make sure if something happened to me from 25 to 45, okay, house taken care of, the boys' tuition and all that kind of stuff. Now, if you booger this up, that's on you.
Right.
But I was gonna make sure that was done. Now, everybody grown, y'all can help your brother. I'm giving you this, giving you that. You got. There are other assets in place where you can take advantage of that kind of stuff. Just a different spot in life, so I didn't have to look at it. Because insurance was all I had then.
Okay.
So there were no other assets or anything like that to move around or anything. So it was just a different thought process. But I always tell people, make sure you talk to somebody credible to give you some good advice and bounce the ideas. There's nothing wrong bouncing ideas against
not somebody who think.
Yeah, shit. Yeah, I believe. Like,
right.
Bad spot, my brother. A bad
I believe
spot.
you should try this. Have you tried it? No.
And again, so guys, we talk about insurance 101. So what is insurance? Insurance is a risk management strategy designed to protect individuals and businesses from financial losses that may arise due to unexpected events or risks. Okay, so just again, things happen because we have something going on called life, and in the event something happens or something throws off, something damage. Hey, Trey Nicole, how you doing, young lady? Appreciate you tuning in. So in the event something does happen, we have insurance to kind of replace that particular thing or mitigate or shorten the loss that we may have. It involves transferring a burden of potential losses to an insurance company in exchange for regular payments, also known as premiums.
Okay.
And right now we're going to break down some of the key components of what insurance is. And again, guys, if y'all got any questions regarding not just the information we talk about, we want to stay on subject about with insurance. But if you got any questions about insurance and things like that, your boy's well versed with it. Like I said, I'm an accountant, but I work in property liability, workers' comp, health, you name it. I've been in those fields. We're doing it. That's for a long time.
Right.
So I'm a little versed with the products. And I can't say and tell you what State Farm going to charge you for this, that, and that.
Right.
But as far as getting explanation on certain products, I got a good idea of certain things, okay? So one of the key things, first thing we're looking at is the policy holder. That's the person that's insured. And the policy holder is the person that actually gets it. And that could be a person, that could be a family, that could be a business. And typically, when you're the one that's holding the policy, that doesn't mean the policy is on you. You might have it on someone else, like your children. Like, you say you work. Sometimes you can be assured you cover your spouse, you cover your children. You may have a parent or something like that, but you are the person that owns the policy.
Okay.
You know what I'm saying? Yeah, you got to have some kind of vested interest with doing it. You just can't just say, well, look, man, my neighbor, he walk around look pretty damn sick. He probably died another year or two.
Get some insurance.
Yeah, exactly. You got to have some kind of vested interest in this person to be able to do it. Now, you can be a caretaker, life partner, whatever, have some kind of relationship, but it has to be something tied to it. You just can't get insurance on certain things. But again, it could be for the person, it could be a business, whoever can, not for, but the person, the individual that's acquiring it, because it can be a business with it. Just like my accounting firm, we have what's called errors in the mission. We're the policy holder of that. We own that. Any kind of mistakes or anything like that, we own that. We're doing it. Same thing, just like rental properties. We have, again, a tenant may have renter's insurance. We have liability insurance just in case of fire,
Dwelling,
break in.
right.
There you go, dwelling insurance. There you go. Appreciate it, Lamb.
Yeah.
Those kind of products there. So that's again the policy holder is the person that is insured that that owns that particular policy. The next being insurer, i.e., the insurance company. That's the person that's actually offering the coverage of the insurance. They're the ones that assume the risk with doing it. You know, you're gonna have you're gonna go to them and tell them exactly what you have or what you want to cover, i.e., a person, i.e., a business, i.e., an event, whatever. And from that point, they'll just say they'll have a conversation with you to find out what is the actual risk or the amount of coverage you need or what needs to be protected. That's why a lot of times, you know, when you buy your home, they'll pretty much you might have bought a house for 100,000, but you cover maybe for 300,000 to 400,000.
Okay.
Because again, you know, we have something called help me out, Lab, when the appreciation of the actual value of the house may be more. So you know they'll do different assessments or whatever.
Okay.
But if you bought the house for let's say $100,000, and then you know just say repair costs, like we know that lumber and a lot of things went up a couple of years ago. Those prices shot up.
Right.
So if you actually just went off with you purchased a home for, and now the value is $400,000, you're not going to be able to get the same kind of repair costs with that because everything goes up.
Right.
Not only did the value appreciate, but we all know the cost of living and everything else goes up. So the prices went up with that as well. So that's why you know you typically will see something insured more with that. Just like in your car with your car insurance, typically it's going to be insured for more than what it is. Even have attachments like medical and things like that.
Yeah.
They're actually going to
monitors and
exactly.
Right.
Exactly.
Yeah.
So that's that's what the insurer is. That's the actual insurance company. Guys, feel free to call in. The number is shit, I'm about to get the damn number. 678-740-9894. Again, the number is 678-740-9894. Feel free to call in if you got any question regarding insurance, something run across your mind. You know, as long as in the lines of that, you know, just you got a quick question about that'd be a quick question. There's a question about feel free to call in 678-740-9894. You just talked about the policyholder, the insurer being the company, and the next is the premium. Now I know a lot of times people hear the word premium, and the funky thing about insurance is that when people a lot of times have to get insurance, they just look at cost.
How much it's gonna cost me a month?
Yeah, but they never really see and get into the actual what is this, what is that, why they come with it. And a premium is pretty much the amount of money the policyholder is going to pay the insurer regularly. That might be every month, every quarter, semi-annual, however you do it. And that's to maintain the actual insurance coverage. So again, men, keep in mind that when you hear the word premium, that's what you're going to be paying the insurer to cover you.
Isn't that the maintenance of the policy? They call that don't they use the premium as policy maintenance fee?
I don't know that the maintenance fee, the insurance, that's just really the cost you're going to pay to get caught, you know, to keep that.
I thought they called it the maintenance fee. And I could be wrong because they that's what they charge you each month to maintain that policy to keep it open. I guess.
Well, that may be part of the premium.
Okay.
That might be part of the premium. The premium just, you know, whatever that part, like they said, you got $100,000 policy, they're saying that you got to get paid on an annual basis $3,000. And you can 36 for easy math, 3,600, and they say you need to give us $300 a month, or however you want to do it a quarter, whatever. So the actual maintenance cost probably is tied into the premium.
Okay.
You know, and when they come with whatever the premium is, that number is brought in by different factors. Or, you know, risk factors, that being, you know, if it's health insurance, your health, you know, a lot of times you see what they give you a physical, you see whatever it is, that take that profile of where you at, they kind of just make a risk assessment from there. When you get your car insurance, they're taking that factor of your driving record, the color of the car, your zip code, all that kind of stuff to take into consideration. Right. You get basic liability insurance for your business, what industry you're in, common errors, a lot of stuff is taken into consideration with doing the thing, with doing it. I always say, if you're looking to get in business, have some kind of broker on deck where you can kind of figure certain things out, because I'm going to tell you something, lad, there are certain industries that people don't think about until they have to get into it. And damn insurance be astronomical. especially when we start looking at medical, daycares and stuff like that. Man, that stuff's crazy.
Right.
And you think like, okay, well, it's one thing to be working in a certain place for a certain amount of years. You're great at doing that. But we start getting those operational costs together and stuff like that. Some of that stuff be astronomical, and you don't even know it. You know what I mean?
Yeah.
A lot of folks really underestimate, a lot of the actual fees, that get associated with it. So,
especially when you're a small business owner, you're trying to open, the fee. Like when I used to manage shopping centers, we would require, no matter the size, to put it on the box of the store, the size of the store.
Mm-hmm.
The minimum would be, and that could be just an 800 square foot of space. We will require a minimum $1 million policy.
Yeah.
Because you have certain things that goes along with that store. Not only the dwelling itself, but people falling, tripping, all that in front of the store, falling in the store. So we would require a $1 million policy on the store itself, not including what we already have on the shopping center, but the store. To even lease the space, we had to see that policy.
Hey, what's up, Chris? My son, Chris B. And we just said you just came in late, son. We just said happy birthday.
Happy birthday, Chris.
We just said happy birthday, my baby boy. That's my boy Chris. That's my third son. Happy belated birthday, bro.
That's right.
But to that point you just said, well, I was just mentioning about, coming in and make sure you got so much coverage. Lawsuits real.
Mm-hmm.
Lawsuits are real. So you got a lot of people that are sitting in the bushes waiting to trip up or fall in the hole or do this, my neck and my back. Shit. All kind of stuff. We're doing it. And just knowing, okay, look, if the FedEx truck hit you, I was sitting at intersection going through it, and the FedEx driver was turning on the street. And I'm thinking to myself, in her mind, she probably like, get the hell out of my way, I run over you. In my mind, I wish you would. I am rolling out of this car screaming.
Right.
I'm just sitting there like, I wish this damn Fed, just to tap my car.
Uh-huh.
Tap my car.
Just a little bit.
Game over. Game over. Because I'm talking, we call them stretcher, the record, every damn thing.
Right.
Man, and I know in her mind, like, look, you holding me up. Right. Okay.
It's about to go down.
I'll sue the shit out your ass.
It's going to be Poochie X.
There you go. And that is the premium. Like I said, pretty much, guys, that premium is the actual amount that you're going to pay that the policy that you have to pay the insurance company to actually hold that insurance. Again, like I said, that numbers came up with for that premium is based off several factors that can vary from person to person.
Mm-hmm.
Me and Lab can have the exact same car, same price we bought it for, but our insurance premium may be different because based off the risk profile that we have. And everybody has a different risk profile. Mm-hmm. And people have to understand that.
Isn't that attached to your credit too? Think about that.
I don't know. I don't know. I've heard certain things. As far as it's been attached to your credit, but I don't know that for sure. But I do know at the end of the day, when you have certain claims already based on it, the industry, driving records, health records, and stuff like that, that can be, it changes a lot. Mm-hmm. That's why you see a lot of times, companies right now they try to give people incentives to join gyms and stuff like that because premiums are through the damn roof.
Right. So
you can see everybody, people may be prevalent with heart disease, diabetes, blood pressure, and stuff like that. So when they looking at it, you can't discriminate nobody, but they looking at it like, look, man, we're paying like the astronomical cost on the employee side to pick up that. You're gonna be paying like it gotta make sense to do this. So that's why they try to get those incentives. Not they really. I'm just be honest with you. I don't think any of them really care about the actual well-being of the employees. Health or anything. Well, let me change that. But for the most part, a lot of them incentives are given to reduce actual insurance premiums. Okay, remember that's the premium is the amount that you will pay the actual company, right? Anybody got a question? Anything?
Slick says that they didn't used to pull your credit, but now they pull your credit at MVRs for the insurance.
Yeah, well, I know you got to put an MVR.
Say hey to your mama.
What's up, mama? What's going on?
Facebook.
Mama Facebook. Hey, mama, what's going on? She checked me, but I ain't catch her last time.
Oh, okay.
I told her she called her late. She came switching over and everything. So that was insurance premium. The next part is actual insurance policy. Remember what I said, guys? If whatever platform you're going to, you can always go back to Mr. Short. Chris said, thank you. You got it, bro. You can always go back to Mr. Short Dollar on YouTube to check out the video in its entirety if you came in, in the middle of the show. So we already went over the policyholder, the insurer, the premium, and now we have the actual insurance policy. And the insurance policy is a legal contract between the policyholder and the insurance company.
Mm-hmm.
It outlines the terms, conditions of the insurance coverage, including what's covered, what's excluded, the limits of coverage, and the responsibilities of both parties. So you ever get a chance to look at your actual insurance policy, a lot of times you'll be able to see. You don't have to even think about. You can know exactly what's covered.
Mm-hmm.
Because so many times what happened, we assume.
We assume.
You know what I'm saying? We got into that fender bender. Now we finding out, hey, listen, I didn't have enough to cover this.
I'm not covered.
I thought I had roadside. That's a big one.
Right.
I thought I had roadside. I thought I had rental insurance just because I got in the wreck. All that stuff is outlined in your policy. You'll be able to see that. But far too often we get rushed when we're trying to go through certain things. And what I said at the beginning, we're so concentrated on the cost of the premium.
The monthly premium.
Just say, and we'll just ask some question. Is it fully insured or is it liability?
Mm-hmm.
And all other shit that we may need to come along with it, we're not even thinking about it or try to do any kind of due diligence to make sure it's there.
Mm-hmm.
But we just say, look, I can't afford this.
Mm-hmm.
This is what I can afford. And they say, look, I can get it down to here. Cool, run it. Now, again, you might got a shell of a shell. It may be full coverage.
Lady Line Lady Love, you came in late. We did discuss life insurance, and we probably double back to it. But you came in late. Got to come at the beginning of the show when it starts. But we did discuss life insurance.
You got to make sure you go to Mr. Short Dollar on YouTube and check the video out in its whole entirety.
Right.
That. And I appreciate you, Line Lady Love, tuning in and everything. But that insurance policy is a big thing because a lot of times people really don't take the time to look it over. Because again, like, look, I can't afford that, but 2 or 3, can you get it down to this? Can you get it down to that? I've heard it. I felt it. Hell, I had to say it before at different times. And you don't really think about it to what? Your ass get burned.
So you need it.
Like, damn, man, I ain't got a rental car. No, you didn't have that on there.
Right.
Or you didn't have certain things. You're like, what do you mean? And a lot of times, man,
I think people get confused when they say full coverage. They think, and I learned this from Slick, they think that full coverage is full coverage. Like it covers it. It doesn't. It doesn't necessarily cover rental cars. And, and when Slick was getting insurance, she's like, man, I always make sure my such and such, this. I never thought of it like that. I ain't never went through a price like that. I always just point and click. Give me that. Thank you. Walk out the store.
I had a tenant. I had a tenant one time that was I'm not a tenant, accounting client that was based, it was in Griffin, whatever, but I remember they owned all these. It was an area of like different quads. They were renting property, but they had each one had like 4. They had like 12. So long story short, they had just put these AC units. Guy hit them up, tore all the copper out. And I remember the guy was telling me, "What's going on, brother Dan? Appreciate you tuning in." The guy I remember the guy saying, "Look, I felt pretty cool because he knew he had insurance on it." Come to find out, he had the actual the dwelling covered for fire, storms, and things like that, but he didn't have it for theft.
Oh,
and they didn't put that on there. So you talking about 4 or 5 units, and I think 4 or 5 units, and the whole auto copper was out. Shit, now you talking about maybe $10,000-$15,000.
Right.
And all this stuff is sabotaged, and they got to come out of pocket for that
because he didn't have coverage.
Man, he had to just damn eat it and lose his crib. You know what I'm saying? This ain't like recent stuff. This is like early 2000, maybe 2010 the latest.
And stuff out of
yeah, exactly. But going back to the policy, he didn't have it on there. He just thought because I had full coverage on it that it was covered. But they told him theft had to be an added addendum. That's the actual update that you have to put on there. Typically now, because there was a big fallout with a lot of stuff, a lot of time, most of them have that on there. But it is a main thing, guys. I will tell you, if that's a rental property, you better make sure you got theft on there. Because if somebody breaks into your house, don't assume that because you got a mortgage with insurance on there, that theft is on. Make sure you check that. So I just want to let everybody know that if you haven't, to check to make sure theft is on there, because somebody can break into your house and certain things ain't covered. Just like certain things with storms, it may just be.
That's a tricky one, right there.
Yeah. Well, that's what I'm saying.
Tricky with that.
Yeah, but that's why I say you need to just have them conversations with that. Hail, wind, lightning, things like that. Some things are covered, some ain't. But again, we can get caught in them numbers, and miss out on some things that like you don't think about it till it's too damn late, or till you stuck with something that you can't get fixed.
On that rain and stuff, those insurance companies tricky on that. So they'll say if it floods, they'll say it's a natural disaster. You like, no, the rain caused the flood. It didn't just start like, you know what I'm saying?
And it all depends on who you got on the phone.
Right.
That shit really depends. When you start trying to explain and argue, man, whoever you got on the phone with you, that's the thing about it. Because like I said, man, your mind, you actually got full coverage, but it is deemed under law with the basics.
Mm-hmm.
But them other things like theft, certain storms, certain fire, and shit ain't all on them.
Mm-hmm.
Even after 9/11, nobody had no coverage for damn planes running to buildings. So a lot of folk got ate bad with that. So a lot of things we got to kind of think about. What we have now, we have something called mass shootings.
Mm-hmm.
All this stuff, man. Look, think about that kind of stuff. So depending on what you're trying to show, trying to cover, it's very, very important that you make sure that you look at your insurance policy to make sure you have everything covered. Okay.
Yeah.
You might say something like that.
Lion Lady Love 2 says full coverage is not what it used to be. Higher amount of the premium, the lowest the bill. My deductible is $1,000, and my house's deductible is $2,000. So she's saying it's not what it used to be. They've changed up some things on the full coverage. Slick says that a tree went through my aunt's house, and that's true. A tree went through her aunt's house, crashed the kitchen, everything. This is house insurance, house insurance, and it still wasn't enough to fix a house. There were certain parts of the house that didn't get fixed.
Well, I just went through that 2 years ago.
Right.
Well, it just finished. It took them over a year to do the repairs.
Right.
Fortunate enough, I was able to cover everything and stuff like that. But again, that goes back to what I was saying earlier. You got to be an assessment, because if you got a house that you deem, and they may or may not send assessors out there to look at your house because you may have a dwelling. Because I know my rental properties, I think they go out every 2 years. Mm-hmm. They'll send somebody out there to just see, okay, like, is this roof fine? If they see certain things messed up with the house, they'll send me, hey, listen, we're going to give you about 2 months to get these repairs done. We're going to drop your rental, the insurance on these rental properties. You got to get some repairs done. So if you have, coverage for $75,000 on something, and listen, we've had inflation, we've had updates to actually the value and stuff like that. It may not be covered. So you got to make sure that you be savvy. That's why I want to have this actual show, because a lot of times people just don't know. They think they know, because when we hear terms like full coverage, it's going to cover the full thing. No hell. There are caps on everything, right? So we need to make sure we kind of verse with it. And again, guys, if you don't know, find somebody that can help you. Find somebody that can help you, because most of the time, again, we go into it what we can afford. And be prepared for the answer. Like, okay, cool, we can update it, but it's going to be $300 more in your insurance. I can't afford that. Hey,
that's what you asked for.
Hey, what I'm just saying,
right.
You got to be realistic. We're doing that. Sometimes you can't afford not to pay certain things.
Right.
That makes sense. But I dig it. I understand everybody got different things going on, but you need to try to make yourself as equipped as possible with all the information that you need. That's what we want to be able to do. We homeowners, we're looking at health insurance, we're looking at car insurance. We want to be able to gather as much information as possible, and then we can make decisions about what we do and what we don't need, right? So that's why I want everybody to be thinking about. Again, tonight's show we're talking about Insurance 101, your complete guide to understanding insurance. This is the Dollar Hour. We're streaming out live on Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter. The main hub is the Mr. Short Dollar YouTube channel. You can Google it. You'll see this handsome face pop up. Subscribe to the channel. So even if you came in the middle of the show, you can go to the YouTube channel, see the video in its entirety, and also all those other 700 videos on the YouTube channel. The next thing we're going to go over is basic what coverage. So people hear what's covered. And when you hear the term coverage just refers to the protection provided by the insurance policy. It specifies the type of losses or risks that the insurance company will compensate the policyholder for if they occur. Different insurance policies offer different coverages based on various risks, such as health issues, car accidents, like we talked earlier, property damage, and more, right? Especially a lot of times you get in business, depending on what type of industry you got. Okay, let's start thinking about, like, you got a club.
Ooh, nightclub.
Yeah, a nightclub. Where they got shoot 'em up, bang, bang, they in the club.
Right.
Those kind of things, restaurants, with fires and all that kind of liability. People
slipping
and fall and all that kind of stuff. Daycares and stuff where you got kids can get injured, they may have an attack, certain things. That stuff is through the damn roof. And again, if you get into it, like, look, I can make some real nice. My pie's kind of like patty pie, and that's your thought process of getting into this shit. You ain't really thinking about,
Right.
hey man, look, all this other kind of stuff.
Right.
And coverage is something else.
Mhm.
And sometimes depending on your risk profile, again, that risk profile being, just looking at all the things in regards to your health, your industry, what we said, motor wreck, whatever. So they may not cover certain things.
That's true. Lion Lay Love says during the freeze back in December, people pipes were busting. That wasn't included in the coverage.
And that's something.
Mm-hmm.
And that's something. But see, the thing of it is just you could have got it updated,
Mm-hmm.
but you don't think about doing it.
Right.
Why? Because in the state of Georgia, you don't typically look to get a freeze addendum or something like that.
Right.
But it'll be, say you go up north, those things happen, maybe a little bit more common.
Right.
They're going to have that thing. You know what I mean?
Mm-hmm.
Right? So typically they'll offer certain things that are actually regionally more common with doing certain things.
They got that problem here, the pipe busted here.
Yeah, well, I mean, shit. I was there the other day.
And they're doing that freeze. And luckily she has an uncle that does that plumber. So it wasn't that big of a deal. But yeah, it was at first.
A lot of stuff we don't think about.
Right.
It's just like if you're staying on the coast, let's say you're in Florida, California, you're going to see more hurricane policies and things like that. You may see some flood. You probably see more if you're near like a flood zones.
Mm-hmm.
Insurance things covered with that and stuff like that. But outside of that, if you're not near a flood zone, near an ocean or a lake, anything like that, a flood addendum, that's not going to be put on there.
Right.
And if you have like a creek or something across the street that you're not thinking about, you got to bring that to, the insurer's attention to do that. So that's the thing a lot of times we don't think about, but when it happens, it hurt us bad.
While you speaking of the floodplain being close to Florida, something I found out recently, and I thought about it, but I didn't really. They confirmed that insurance companies have insurance companies. You get what I'm saying? Because in Florida, the insurance company is pulling out. Farmers is pulling out, like Lion Lay Love says, because their insurance won't insure them for Florida.
Yeah.
So they have no insurance companies. It's all state funded now.
Typically, the way insurance, this is not what it shows, is just knowing. I work for an insurance company. We were a self-funded insurance company. Typically, the way insurance companies are funded is that they'll get all these different brokerage firms or whatever that actually specialize in funding insurances, and they'll take those actual premiums that they have, pool them together. They may be different insurances together, and get them put in different brokerage firms, and get they need hundreds of millions or billions of dollars to kind of do it, because at the end of the day, if you start looking at it, 9 times out of 10, most people are not going to have a catastrophic loss with a car accident, or fire, things like that. But you got so many people paying those premiums, they can take that dollar amount, put in certain brokerage or vehicles, whatever. It's growing at enough that the actual dividends or interest rates that the actual product is growing at is going to be much bigger than the actual premium. When they're writing bad policies, i.e. the people that have a history of losses, a history of tickets, things like that, that's when things kind of work against you.
Okay.
That's where we're going to get back to those actuarial people, those people that actually focus on those kind of things. We're doing it. But typically on the bigger scale, they'll have saying they insure it, that's how a lot of them self-funded. I know when the company I work for, we dealt with most of the counties in the state of Georgia. And that's how we self-funded. We're doing it. We just use certain, there are companies out there that actually help pool in those particular funds, and actually, just the amount that's invested, those actual disbursements, the interest or the dividend from that, is usually can cover, most of the time, can cover your losses on an annual basis and everything we're doing it. But it's just a funky way they can take this profile, get the right amount for you to pay the premium, and it'll work out. We're doing that and stuff like that. A lot of math. Hey, parents, if your kids do math, you need to push them.
Right.
They pay a lot of money. I know damn well them guys didn't do a whole lot of work.
Right.
They get paid a lot of money to do 1 + 1. The next thing we just talked about coverage. The next part is deductible. And I remember me and PJ had a little fender bender about a month ago. We were just talking a little while ago about deductible. And he was like, what is this? What is that? And I went through the whole little one-on-one with him with that. But in essence, I know a lot of people, when you buy an insurance, they'll tell you, like, what Lion Lady Love said, typically the higher your deductible, the lower your payment. The lower your deductible, the actual higher your payment may be for doing it. And so what a deductible is, The initial amount the policyholder must pay out of pocket before the insurance coverage kicks in. For example, if you have a car insurance policy with a $500 deductible, you have to pay the first $500 of repair costs for your vehicle, and the insurance company will cover the rest up to the policy limit. I say again, up to the policy limit. So again, the deductible is the first amount that you will pay towards that coverage getting kicked in. So you have a $500 deductible, you pay the $500, and then the actual insurance company will cover the rest of it up to that cap that's already written on that policy amount. Mm-hmm. Pretty simple.
Yeah, you know what? I wasn't very versed in insurance. I'm going to be to her credit. Slicky versed me on this insurance because her deductible is $0.
Okay.
And I was like, why would you? And she showed me one time her car got broken into. They stole all her stuff out of her car, and she called the insurance company, and they, within a week, they sent her a check for what was in the car.
Yeah.
You get what I'm saying? Busted window, everything. They fixed everything on the car, and she had to pay nothing out of her pocket. But she pays a little bit more a month for her insurance. But I was like, wow, so you ain't got to pay no money? And she's like, no.
Okay. Transparent moment. What I was just talking to P-Dog about. P-J was just sitting there like, Dad, he wasn't at fault. Somebody bumped into him, insurance saying $500. Couldn't get other folks insurance, this, that, and then I'm trying to just tell him, hey, listen, you worried about a $500 deductible.
Right.
Me and you can fix that. But my point with him was, you worried this damn bumper might be $2,000.
Right.
That headlight might be damn $600-700.
Right.
So in your mind, this may be because you don't see too much physical damage.
Right.
Or is it like a crack? The part it will be way more. So when you're riding down the expressway a month or two from now, and you don't see some of the underlying damage, and you went so far out because it'll be okay. Now they're not going to even honor it because it happened that far back, because they do have a window. Why you didn't report this earlier?
Right.
You know what I'm saying? How long that'll be there vary from company to company. But you sitting there blowing this shit off. We're doing it, and there may be some underlying issues that I can't see initially. Right. We're doing it, and you'll end up paying way more money. And that's the thing I'm saying now, like, you don't get caught up in, what you got to come out of your pocket.
$500.
Exactly.
Right.
$500. But damn, bro, this damn $4,000-5,000 in repairs. They got to get done. Do you have it?
Layla said that headlight costs $1,000 a piece. Let me go over a couple of the statements. Layla said that State Farm canceled her insurance because of her dog. He was a child. I don't know. Why they can cancel it because of the dogs? Yeah, they got like $5 that's on the list you can't have on there. Oh, really?
Yeah, because my insurance guy, he listened to the show. Me and him had a conversation. He explained that pits, Rottweilers, it's like 5 or 6 dogs.
That you can't have.
Yeah, you can't. They don't even want you having a property dwelling.
Oh, okay.
Yeah, they don't even want you to even have those, and you got to probably get some kind of another expensive addendum. And if you don't have, you will find out. God forbid something happens.
She said it costs her a lot of money.
Yeah,
a lot of money.
I can imagine, but they got a list. They have a list.
Okay.
Of dogs.
I just never heard it. I wanted to go back to that statement.
And I think majority of homeowner policies have that on there.
That's them dogs.
Yes.
Oh wow.
Yes.
Wow.
Yes. Majority of homeowners.
I just learned something today. Like, you can't have something. Like, you gonna tell me what kind of dog I have? Miles? I pay the mortgage on.
Absolutely.
Oh
because
wow.
at the end of the day, they go bite somebody. They know you ain't got the money.
Right.
So what we do?
Insurance, homeowner insurance. Right.
There you go. And so that's the thing where, and if you don't, the mortgage has to have insurance on there. So your insurance company drop you. Now you got to go through the mortgage company. They charge you probably 2 or 3 times more the amount because you got to go through their little funky spot. So make sure you do your research. That's why I say always, when you make any kind of decisions, I understand everybody got different money situation. What's this free spirit? 5061. Hey, how you doing? Thanks for tuning in. That's a true statement. Appreciate that. Thanks for tuning in. That's on TikTok. We can't get caught up a lot of times just that month we got to pay here each month. I understand everybody got different financial things, but you got to understand when things happen, you got to be realistic about it. So I know we see that. Hey, listen, I can't afford that deductible. Like you just said, we're doing that, or I can't afford that monthly payment. Let me get a higher deductible. You got to be realistic. If something happens, are you going to be able to do that? Or you be riding down expressway with the damn hold up. You see them folks, man, like them Credible Hook them punch their car on a 2023 whatever, and the whole damn bumper caved in. You know, like damn, you know what I'm saying? Because they don't want.
always said they kept the check.
I don't even know they went that damn far.
Right.
I don't even know they went
the whole trunk is in the back seat.
2023.
Right.
What the f- is going on? What the hell is going on? Right, like ain't nobody see your ass. This shit just driving sparks and shit on the expressway.
They kept that check. Yes, they said they kept that check.
Boy.
So they said people need to know that what comprehensive insurance covers. So
Absolutely. That's why I say when you're looking at it, you got to make sure you savvy enough to not just be so. And again, reason why people don't because they're so focused on what I got to pay a month.
right.
And I get it. I get it. I understand. I need this car. I got to get this house. I got to get it, and I really can't.
Do all this.
Do all this.
Right.
I understand.
Right.
And sometimes you can't afford not to skip.
Uh-huh.
And a lot of times when we have financial mishaps in our life, it's usually due to things that we skip. You know what I'm saying? We got Mr. Charlie to put the lights up because he was cheaper. Got a whole damn house on damn fire.
Mr. Tyler,
You know what I'm
Tyler
saying?
always cheap.
Got your cousin come and do the damn plumbing.
Right.
Water and shit coming all out the damn sink. You know, you can't call your baby dad for every damn thing. Set your shit on fire.
Sometimes you gotta get a professional.
Yeah. You can't afford, man. Let me tell you something. And I'm speaking with personal experience. Cat I know, man. I ain't gonna say his name, man. We cool brother, man. I call myself this about maybe almost 20 years ago. Young guy trying to just save money, getting quotes. Shit is high. Get this guy. Cause you talk to average handyman, it ain't shit they can't do.
Right.
So they ain't gonna knowing they ain't never did plumbing, knowing they never did electrical. Now they may can put a damn doorknob or something on,
Right.
because they work
Change
part time
locks.
in the apartment, right? But they gonna tell you like they can just do everything.
Right.
You like okay, cool, because you see what he got some paint on his hands and shit.
His clothes dirty.
Yeah, clothes dirty and stuff. Man, go there and tear your damn house up. Now you gotta turn around, pay somebody, 2 or 3 times to fix not what you needed at first. We just need to repair.
Mhm.
You gotta get him to fix his shit,
Yes,
then get it back the way you want.
Right. So
You know?
you're paying double.
So sometimes, like I say, man, listen, I'm speaking out of personal experience. Trying to be Mr. Cheap Dollar, blew up in my damn face.
And then a lot of people don't realize that the professionals have their own insurance. So if they come in and mess up something in your house, the insurance gonna pay for them to fix it.
You got a cheap landscaping guy,
Mm-hmm.
you don't put all the $1,000 in damn the irrigation system to get your lawn water. Man, you want to go to this guy who ain't got a legitimate company, they run over your shit. They can't afford to fix that.
Right.
Hell, they need that damn money you need to give them.
Right.
So
Right.
you got to be smart about that, man. And all of us have done it. Not I said all,
Yeah.
but a lot of us have done it. And I'm just actually out of personal experience. Some shit you just can't afford not to pay. I
Right.
want to leave that at that. The next thing we're talking about Insurance 101. Getting a better complete understanding of what insurance is. The next facet of insurance we'll talk about is claim. Remember, guys, you came in at any time, in the middle of the show, you can always go to Mr. Short Dollar on YouTube and check this whole video out in its whole entirety. So I will recap all the different pieces that we talked about, just exactly talk about at the end of the show. But if you just came in the middle of it, you can always go to Mr. Short Dollar on YouTube. Just Google it, and the channel will pop up. And you see this video in its whole entirety, okay? The next facet we're talking about Insurance 101 is claim. A claim is a request made by the policyholder, i.e. you, to the insurance company for the compensation for a covered loss or an event. When an insured event occurs, the policyholder contacts the insured to initiate the claim process.
Mm-hmm.
And a thing that I learned a couple of years back, I had a friend of mine works for insurance, doing insurance litigation. She explained to me because I was just like, because the thought process is that if you have an accident and you're not at fault, it does not affect your insurance.
Mm-hmm.
But that's not the case, because just like when you get insurance, they pull your motor vehicle record. They also pull something what's called a clue report,
Mm-hmm.
and a clue report lists your insurance claims. Is either 3 or 5 years. I can't remember,
Mm-hmm.
but all claims, regardless if you're at fault or not,
Mm-hmm.
regardless you're at fault or not, but as long as you're on a clue report, that's still a ding, regardless it's a claim that you did.
It's on motor vehicle.
Well, it's
Or
with insurance.
all insurance.
It's with insurance.
Okay.
The motor vehicle is just speed and accidents and stuff like
I'm
that.
saying that the clue report is on motor vehicle. It's on all insurances.
Oh, it's gonna be on all. It's gonna be on all. Yeah, just
Okay,
claims and everything like that. But I'm pretty sure car when they put on cars, they ain't gonna worry about that. They're just looking at the claims of that, or what's doing it. So you gotta just something to just be kind of, just thought processing with doing it, because a lot of times people will say, well, listen, guy bumping from behind, I'm finna get paid, and you turn around and get your couple $1,000 check, but then you start looking, damn, my whole premium went up.
Mm-hmm.
You know, you're supposed to have an average, what is it, 4% increase each year, whatever, you know, or what they're doing. But you're like, man, this shit went up 10%. Then they're going up a little bit more because these claims were filed, even though you weren't at fault.
Mm-hmm.
But just keep it in mind, the clue report is going to be still listed on there. If somebody knows the exact tenure of being on the clue report, please chime in.
Some beautiful say it's not supposed to affect your rate if you are not at fault, but that's what the clue report is about,
That's
right?
what the clue report is
Let me
about.
look it up for you and see. Go ahead and finish talking.
And
if they got it,
but again,
they might not have it.
call your insurance company. Call insurance, because what happens is a lot of times your policy goes up. You may think it just went up. It's not going to go. You know, like if you get a ticket, and then you'll get like a notice. Well, this has happened to me, and I think it's kind of common. If you get a ticket today, you may get a letter from your insurance company. Your premium immediately goes up. Like it may just be whatever it goes up. It immediately will go up because it's adjusted because they got that letter from the motor vehicle motor vehicle office, and they'll update it immediately, right? So maybe a week later, your insurance goes up. The clue report is not going to get adjusted until that annual premium. It's not going to adjust to the annual premium. What you about to say?
Clue report, comprehensive loss underwriting exchange.
There you go.
What's on there? What it contains: your name, your date of birth, your policy number, date of loss, type of loss, amount the company paid, description of the covered property, property address for homeowner's claim, and specific vehicle information for auto claims, payout money, set up a file for a possible claim, formally deny a claim. So this is what companies report. That's what's in the report. How insurance companies use the clue report. An insurer may request a clue report when you apply for coverage or request a quote. The company uses your claims history or the history of your claims as specific property to decide if it'll offer you coverage or how much you'll pay. Insurance company studies show a relationship between your past claim and the claims you report in the future. So basically, it's just like a credit report for insurance.
Yeah, just basic claims on there.
Right.
Here's the deal, like I said, is you update it on the annual side. Not like when you have an accident, you hit somebody that goes up with that. When you got your annual premium, so you may not even be conscious of doing it. But typically, I think it's 3 or 5 years. I know it's an odd number that it stays on your record with doing it. So I'm just saying, guys, sometimes in the grand scheme of things, it may cost you more. You may like, okay, I got paid on this particular accident, but in the grand scheme of things, it may cost you more
in the long run.
In the long run, we're doing it because I know they're having my stupid ass. I'm just being very honest with you. We're doing it because the way my policy went up after I got my check, I mean, in a matter of 3 years, hell, I'm paying more, because of that increase. If that hadn't happened, and until she had explained that to me, I didn't really understand it. She said, "Hey, listen, and so I think one of those cycles in it, because unfortunately, I got, I've never really been, knock on wood, been at fault. But sometimes look like you can't be this damn unlucky. Everybody keep hitting your ass. Why?
Right.
So yeah, and unfortunately, hell, I was. But in their eyes, they're covering their insurance, so you just gotta take that how it is. But that's one thing I will say: if you have any questions, call your insurance, come have a conversation with them, just find out. You can probably get access to you. I don't know the accessibility they give it. I think that's just something more of actual that's provided to the insurance companies. I don't necessarily know if they get it out publicly to anybody. Like you can pull it like your DMV record. I don't know.
They say you ask how long you've done it. They say it collects and reports up to 7 years of auto and personal property claims. So 7 years. So just like your credit report, 7 years. Yeah. 7 years they report that stuff on there.
Man, I'm just telling people. I know a lot of people be free willing trying to do it. It's not it doesn't go up like your driving record, like getting tickets and stuff like that.
So I'm Slump Beautiful says that even roadside assistance is a claim, though.
Yeah, it's a claim, man. And AAA dropped me because again, I got the kids on there, got the OLED cars, and they probably damn. I know what's happening.
Right.
Their friends lock their cars in. Hey, we got AAA. Unlocking your friends' cars, your friend car breakdown, you get their shit towed, and I get a letter in the mail, they're not renewing it.
No.
And I know what's going on.
Right.
I know what the hell going on. You know,
Right.
so they're seeing those particular claims and they drop me.
Mm.
Saying that with the amount of claims, ain't nothing wrong with my shit.
Right.
But I know my kids up under
They
there.
use it every chance they get.
Oh, that's one little thing, little girl. Oh, my keys locked in. Don't worry, I got AAA.
I got AAA.
Yeah. You had AAA, MF. You had AAA. So the other damn conversation I just had with him, my guy.
Right.
MF, you had it. Again, tonight we're talking about.
Y'all look flat with
Yeah,
AAA.
man.
I don't know what you think of that.
You ain't got it no more. Again, tonight show we're talking about Insurance 101. You complete got to understand the insurance, going through different facets of insurance. Again, this is a dollar hour. Hosted by your truly Deonte Burden. If you are coming in the middle of the show, make sure you go to the YouTube channel. Whatever platform you're on, go to Mr. Short Dollar on YouTube. Subscribe to the channel. You can see this whole video in its whole entirety, along with the over 700 videos on the YouTube channel, and also along with the over 150 grant opportunities for any small business owner looking to get assistance with funding. In addition to finance playlist with an entrepreneur playlist, a lot of tons of great information on that YouTube channel. So go to Mr. Short Dollar on YouTube. Subscribe to the channel when you get there. The next facet is underwriting. The underwriting basically is just the process that insurance companies use to evaluate the risks associated with insuring a particular individual or entity. This assessment helps determine the premium amount and the insurability of the applicant. Mm-hmm. So a lot of times, especially when you start going into a lot of times people hear underwriters a lot when they're looking to get loans, especially like a car loan or specifically like a mortgage.
Okay.
We're doing it. Underwriters, they're pretty much, they taking all the data. They're the ones that gather the data from the motor vehicle record, the clue report, all this other kind of car information.
If you're insurable.
If you're insurable, or come up with that price.
Okay.
Those are the ones. Those are the people actually getting it. So that's what they come with doing it. Usually, sometimes with software and stuff, they can kind of get the agent can probably get a lot of stuff on the surface to say if you can or can't. But they start going through the process because they can give you a quote. That's why you have sometimes when you get a quote of $3,000, then it goes to the underwriter. It may come back to $3,200 or something like that because the underwriter was able to maybe pull certain information and whether it's successful or maybe a little bit lower. But that's what happened when the underwriter is one that's gathering all these different information, pooling, making an assessment of what the premium is going to be. So that's what the underwriter does. The next thing is we're talking about risk pooling. The risk pooling here, this is a thing that everyone's insurance goes through. That's insurance works on the principle of risk pooling. That's how insurance works, risk pooling, right? They're looking at many individual businesses pay premiums into a shared pool, and when cover loss occurs, the insurance company draws from that pool to compensate the affected policyholders, like I was explaining earlier.
Right.
Typically, like I said again, you might get certain a lot of different maybe marine, auto, or mortgage insurance places. They actually maybe pooling funds together. They got this big brokerage company. They're putting all that stuff together because my 100,000, lab 100,000, another per 100,000. Then we got $300,000 that we can invest in, put in certain things, and the actual now what we get a dividend or a disbursement on certain things or an interest payment. That those amounts. When we start looking at the pool, when we done our risk assessment, we've had on our underwriting. Chances are, if this person has a kind of accident, we're looking at they have no DUIs, no tickets, probably an accident very small, right? Basic car, nothing like that, nothing flashy. Chances of the car getting broken and stolen very small,
right?
But we still collecting this money, right? At the end of the day, we're taking all these funds together. We got this same house, we're in the same industry, we're pooling together. Now we got a bigger cat to get in bigger revenues with us on the actual investment side. That's how we're able to cover that pooling part, okay? That was a very funky part about insurance accounting, understanding that side of it in regards to that money, how those funds were set up, and how we could see honestly if you was in any kind of risk or if you had like a big surplus. Sometimes you may have certain discounts available to you, or you may get an actual a rebate check back from your insurance company, depending on how them investments went on a particular year. So it's something kind of keep in mind. The next one, this is the key one, right? This is the last one, matter of fact. And this is why I tell parents you should be on your kids by math. It's actuarial science. Guys, I was a finance major. Finance is pretty much, we talk about accounting deals with present and past, finance deals with present and future. It's big math based, but the other side of that we had in that house of that was risk management, was insurance side, and actuarial sciences. And typically your actuaries are either three different things. They're either Asian, Indian, or African.
Oh, shit. Okay.
Typically, you have people that are actuaries.
Okay.
Asians, Indians, or Africans.
Okay.
Straight walking calculators.
Okay.
And actuarial science involves using statistical and mathematical methods to analyze and calculate insurance risks and premiums. Actuaries play a crucial role in designing insurance policy and determining appropriate premiums. And I say, man, they come out of school making $80,000.
I'm right out of school.
Right out of school. Right. I say they don't need you to be sociable. They don't need you to talk. You don't need to sell yourself. They have probably a damn 100% hiring rate. But I'm telling you, dog, like typically, I've seen it. Most of them are Asian, African, or Indian. And I mean, just straight people have strong math bases. Because again, they use that statistical data where they can look at, black, white, age. That's why they get that stuff. You can hear it, and they use the explanation. Typically most rare cars get stolen out of that zip code. They're the ones that actually calculate to know, hey, that zip code is a risk, is a high risk, whatever. But that's what those actuaries do. They come to that assessment. So we're gonna rehash everything, guys.
I got one question.
Sure.
Question. A couple of statements too. Lion Layla says they look at how many tickets in the last 5 years. Slick says, why do they want all people in the dwelling to have the same insurance company? That's a question she asked.
I think, let me answer that. With the insurance company, I think it makes it cheaper. They can offer because they can disperse it. When you get to when we talk about the pool of it, if you have everyone in the same dwelling, I don't know if it even was the same dwelling, but just say if you have a similar coverages, as far as you guys together in the same place, because it reduces the risk because you might share cars, things like that. Having multiple policies, you put more funds into a particular thing so they can make it cheaper. Okay. With doing that, typically if you have like homeowners insurance, auto insurance, things like that, it can be cheaper. Or you add like one of your children in or something like that because you add more money to the pot. Because remember, like I said, just keeping theory, they're taking your money and putting it into another pot.
Investing in other things.
Exactly. And keep in mind, the way they're investing with other places and just going back into it. So they add more to it. We're doing it so it can just lower the cost of certain things they can put out to you. We're doing it because, again, we start doing the math on the statistical side, we start calculating it. Chances are we put more and more things in. I can offer a cheaper product here because the amount of money you're putting in, it wouldn't necessarily be as much for the coverage. Math kind of just changes. The more you put in, kind of less risk and things like that. How you feel about it. Right. How it is how it is. You know what I mean?
Right. Some beautiful says about actuary science. They make projections. Yeah. So yeah, that's it.
Yeah, man. I never met a black like some of those African American. I didn't see too many white guys.
Actuary
science. No, I didn't see too many damn white guys with finance majors. I mean, I ain't see too many white guys. I damn sure see no black guys.
Yeah.
We're doing it. When I hear a black guy telling me there was finance major, I was like, whoa. I know, because ain't too many brothers. Because so, man, you gotta be so strong in math.
That's what kicked me out of chemical engineering.
Yeah.
I was chemical engineering down my first 2 semesters of college, and it was like I couldn't get the math, like just too much math.
I seen a post one of my old classmates posted. Why would a person need Pythagorean theorem? Why would that be important in your life? And everybody was chiming in. Yeah, that stuff ain't necessary. Why would you need it in life? But the problem that you're looking at it, if you know that shit, your life would be a whole lot easier. So you can look at like, why do I need that? Mm-hmm. But you're not understanding. Like, listen, if you know that shit, mm-hmm. your life would be so much easier.
Right.
Because they pay you. You know what I'm saying? Mm-hmm. I ain't trying to boast, but I get paid this little amount of money. What the hell I got in between my ears now? So that's what I'm saying. Like, a lot of times because we're not familiar with it, mm-hmm. we don't push it a lot. But that STEM shit is real, man. I mean, they're underserved, but I mean, just if you got some kind of quantitative background, you got some familiar numbers, they will pay you a lot of damn money. I'm just saying, parents, like, listen, don't just deflect that. Hey, it ain't needed. Shit, trust me. Somebody need, they will pay you a lot of damn money to do that. Yeah. A lot of money. And I know they strictly, I ain't even gonna say 9 to 5. That shit may be 10 to 3. Mm-hmm. And man,
shit. No weekends.
Hell no, man. Hell no. Hell no, man. Hell no, man.
Yeah,
I seen it that day, man. That's one field, man. That they get paid.
yeah.
They get paid,
And
man.
they take those over to those investment bank stuff. Then they get millions of dollars a year.
When you start going to any kind of analytical side of any kind of company or whatever like that,
Mm-hmm.
that's what you're mainly gonna see anyway. African, Asian, and Indian.
Mm-hmm.
Just because of math for me.
Right.
That's
I
because
mean, you
of
go
math
to
for me.
Georgia Tech and you ride down the street with Georgia Tech going on.
That's how you see.
Yeah.
That's how you see most of the Indians, Asians. I mean, again, and what it is just that in the U.S. that's why they push it so much because they're underserved. Not just even with whites. It's just Americans really don't push mathematics. So that's why a lot of times, we have to pull from other countries. Now, those other countries don't push social skills
Right.
like we do and everything. But again, that's a big segment where we kind of like stuck.
Right. Who needs social security when I'm making $600,000 a year?
Well, you see, you're seeing how depending on another industry with the chip shortage,
Mm-hmm.
how that affected just our whole auto industry was doing that. But we don't have the actual what's the word? Amazon had it, the actual employee capital.
Mm-hmm.
Like we got people that can work, but just can't do certain skill level. Ain't got to do certain jobs. You just can't fill certain jobs because the actual academic side ain't there. But that's a whole nother conversation. We're doing that. People getting their feelings, but like there are a lot of jobs that are available. They got to give them somewhere else because we can't fill them with what we have in certain things, man. So again, tonight we're talking about Insurance 101, your complete guide to understand insurance. Some of the key phrases key terms that we went over. And remember, guys, go to Mr. Short Dollar on YouTube and you'll be able to see the actual. What's up, Bob? My boy Brandon Bob. That's one of my dogs from Germany. Man, what's happening, B.O.B.?
He still live in Germany?
No. He I think I know Bob from South Cobb area. But man, me and him was in Germany together. One of my dogs, man.
Lady Line Love, the comments on YouTube, the comments from Instagram do not be on YouTube, but if you go on YouTube and make comments, the comments still be there.
No, the comments that are on, that's a good question. The comments that are on YouTube are the comments that come from the StreamYard, which is Facebook, LinkedIn, and Twitter.
Mm-hmm.
That's what, and YouTube. Those are what's on the YouTube feed. So if you go there, you'll see that. Instagram and TikTok has not integrated into StreamYard yet. So we get there. We'll take when they actually do that. That'd be great. But as of right now, and I'm surprised Instagram doesn't do it because Facebook
don't like third-party apps on it. Types of their apps.
I got it, but I'm just thinking that because Facebook on it. That's why in my mind I was thinking that. But
you'd be surprised. Like, I don't know. They want you to be strictly mobile.
Yeah.
Instagram is strictly mobile. They want you to stay mobile app. That's why you can't go live from a computer with them.
Good point.
Yeah. They want you to stay in your hand.
Yeah, Lab is man. He knows that. But the terms we went over tonight again with Insurance 101, your complete guide to understand insurance. The first one being policyholder, insured. That's i.e. you, the person that actually get the policy. The second was insurer. That's the insurance company. That's the person that's actually going to issue out the insurance. The next one is premium, and the premium is the amount of money that you're going to pay on whatever basis, be it monthly, quarterly, annually, semi-annually, annually, to be insured. The insurance policy is the actual legal contract that the policyholder and the insurance company will have together. Then we have coverage, which refers to the protection provided by the insurance company. Then we have the deductible. The deductible is the initial amount paid by the policyholder, so you can start the whole process to get your coverage started, right? The next one was claim, and the claim is a request made by the policyholder with the insurance company for compensation for the covered loss and event, right? The underwriting is the process that insurance companies have to evaluate the risk associated with insuring a particular individual or business. Risk pooling is insurance company where they work together to actually pool certain people depending on their profile, where they actually have funds put together to match certain people with certain policies they need. Actuarial science, again, that involves the actual statistical mathematical methods used to analyze and calculate certain risks or insurance premiums. Listen, guys, we all got to, if we're, not living in a cave, you probably have to have some kind of insurance associated. But again, I want to have the whole basis of having the show tonight was to have that conversation with you guys, give over terms. I wish more people called in because I know a lot of y'all got questions, but I do appreciate all y'all that did chime in. But guys, remember, make sure you do proper due diligence and finding out because we just having this conversation tonight. I think a lot of people ask me like, "Damn, I didn't know that. I didn't know that." And it happens all the time. It's not uncommon. And a lot of times, conversations at the barbershop, salon, cigar spot, and stuff like that. You're talking to a lot of people that actually participate, but not a lot of people that actually know. So I will say, make sure that you put yourself in front of people that actually answer the question. You might your agent might answer some of these questions. Look over your policy. Look it over, kind of find out. Don't let the time of the accident be when you find out you do not have renter's insurance.
Right.
Don't let that be the time you find out you don't have roadside. You know what I'm saying? You on the side of the damn road, like, oh, I got it, and you don't damn have it. Your house get broken into, and they won't pay for, the items and stuff was stolen. Lightning strikes your house, and they will not pay for the TVs.
Right.
And it happens all the damn time. So again, I hope the show helped you guys. Anybody before we close it out, open the floor up. I always open the floor up at the end of the show if you got anything that's business related and questions like that, grants or anything like that. We're gonna give you guys a couple minutes to get those in. Let me know if y'all got any question or anything, or open the floodgates. You gotta let me know. If you got a question.
No questions. Leilani says her daughter-in-law was a lawyer. Now she's on the other side agreeing with the judge.
She also said, I don't know if this is a good statement to read, Leilani, but I'm gonna read since you posted it.
Now her cucumber is withering. Her cucumber is withering up, and she just bought it yesterday. I don't. What you doing with that cucumber to make it wither up? Okay. Our Love Beautiful said she dead ass switched agents because of what you said previously. So yeah,
She said good shit too.
Okay.
Good stuff. I'm Love Beautiful said good stuff, guys.
Okay, look. Well,
I appreciate you tuning in.
I appreciate everybody tuning in. Remember, guys, if you came in the middle of the show and near the end, feel free, but not feel free. Go to Mr. Show on YouTube, subscribe to the channel. Make sure you subscribe and hit that bell to get a notification each time we upload a new video. But definitely go to the YouTube channel and check out the video in its whole entirety, and also take advantage of all the other great information that is on the YouTube channel. I appreciate you guys. Love you. Thanks for all the love and support. It wasn't pretty smooth. Last week, man, we were talking about them damn baby daddies and kids and all that don't change your lives, boy. Folks shaking in their boots.
That's right.
So, man, I had a blast tonight, man. Good show, everybody. But again, guys, thanks so much for tuning in. Thanks so much for the love and support. Go to the YouTube channel, subscribe there, and continue to take advantage of all the great information that is on Mr. Short Dollar. I love giving out good information. Love giving out free information. Guys, remember, when I get them calls, this is free. This is free. We start getting other stuff so take advantage of it. Like we open up shit, you get the questions answered now. Like these are perfect times to call in and do that. We give them that damn phone, it's a different story.
They might want to pay for your service.
But if you do later on do have any question or anything like that, I will say this. Put your go to the YouTube channel, put a comment to Line Lady Love question. When you go to the YouTube channel, you can actually input comments and questions. I am very active. I usually take no more than a day or so to get back while I'm checking the feeds or the comments on the YouTube channel to ask if anybody got any question or anything like that. Okay. But listen, guys, thanks for all the love and support. I appreciate everybody tuning in. If you get a chance, also check out my other YouTube channel, Changing Lives, hosted by yours truly, Deonte Burden. Take care of yourself. Love you all. Be safe, and I'll talk with you soon.